Hi everyone, this is Rohit from Lifestyle Mastery, and I'm excited to have Manish Patel, who's a general partner at Nava Ventures, and he has led teams that have designed, developed, and scaled products with global impact from enterprise advertising systems like AdWords to consumer experiences like Google Maps. Welcome to the show, Manish.
It's great to be here, Rohit. Thanks for having me.
Awesome. So you have an interesting journey. You were born brought up in the UK and then you moved to the US. But I'm quite interested to know about your childhood journey and what led you to get into this crazy world of VC.
Yeah, absolutely. So, I'm certainly the accidental venture capitalist. My family is from Uganda. I was born in the UK. We moved to the United States when I was quite young. I grew up most of my life, early years in rural Kentucky, of all places, outside some tobacco fields and very kind of farms and agrarian kind of culture.
Yeah,
I went to high school in Virginia and then was lucky enough to go to Stanford on scholarship, and that changed my life.
yeah.
My first year at Stanford was right after the first dot-com bust. And so it was an interesting time to be in Silicon Valley and open my eyes to the power of technology. And that's really where, my journey in Silicon Valley and entrepreneurship began.
Interesting. And how was Stanford university? What did you learn there? And I've heard such great stories about Stanford. Like if you want to get into entrepreneurship, you need to go to Stanford. Is does it still hold true?
Yeah, I don't know if you have to get in entrepreneurship if you have to go to Stanford. There's many great entrepreneurs that haven't, but for me, Stanford really resonated with who I was. It's a very entrepreneurial school.
Yeah.
There's so many amazing founders and technology companies that just have come out of that university. And I think there's this interesting thing that's very different about Stanford than many of the, Ivy League schools on the East Coast, where at Stanford, nobody cares who your family name is.
Mhm.
They don't ask who's your mom, who's your dad, who's your grandfather. It's like, who are you? And I think
Yeah.
that's really important. I think entrepreneurship is so much about proving who you are every single day. And there's this ethos at Stanford that people don't care about if you came from aristocracy or from a farm, It's just
Yeah.
like, who are you and what did you do today? And I think the culture, because it's so thick with people that are amazing world-class entrepreneurs, from the founders of NVIDIA and Yahoo and Google, the list goes on and on. There's these great role models to follow where people can say, hey, that person a few years ahead of me did something that changed the world. They can see that path. So I think it's a school that really does bring out this entrepreneurial spirit in people. And I love it. Being there in 99, that freshman year, and just seeing the people that were coming out of school building these companies. And it was building companies where literally it was two people in a garage,
Yeah.
and they're writing a little bit of code that then touches billions and billions of people. And for, an 18-year-old, that blew my mind. It's
Yeah.
incredible. And even in Stanford's founding, Hewitt and Packard, famously Stanford alums, they built that company, which one of the pillars of Silicon Valley, Hewitt Packard HP, out of a garage just down the street from Stanford University, and that was, I think, yeah, during the Great Depression when Hewitt HP was started, right? So
Yeah.
for decades, Stanford has been doing that. And that's kind of really resonated with who I was as an individual. And I think that's why Stanford's been able to just produce so many amazing entrepreneurs and companies and people that have really shaped the world.
Yeah, no, absolutely. I'm a big fan of, Stanford, Howard, and how it has shaped the American the tech ecosystem. But you've had work with Google in Google Maps and AdWords, and also with Highland Capital. How was the experience at Google when you're trying to build those products, and what was the entire experience for you there?
Yeah, I mean, Google was an incredible place. I was certainly lucky to be part of that company's journey as an early employee through the IPO.
Mhm.
It's not like I had a brilliant vision of Google is going to be a $2 trillion company. I don't know if you asked anybody in 2004, 5, 6, is Google going to be a $2 trillion company? They would have been like, "You're bananas." That's crazy.
Yeah.
And here we are today, right? And so I think a few things have always been through lines through my career. And one of the most important has been the people.
Yeah.
Google was incredible because of that early group of people that founded the company, that were leaders in the company, that joined the company. And then it was founded in the right market environment, frankly. I think sometimes people forget how important, the tailwinds are for growing companies. And Google wasn't the first search engine by any stretch of the imagination. They're probably the 50th. But they had a little bit better product, and they were formed in a moment where the entire web was exploding. Web 2.0 was happening. Websites were becoming ubiquitous. It went from kind of closed wall gardens of AOL and others to really just all over the web. And Google had a better way of helping people find the websites they wanted to get to. There was an innovation happening on the advertising side where advertisers were getting more comfortable with digital advertising. So money was flowing into the internet in meaningful ways. And I think that combination of things made a great recipe for what then created Google. And also credit to the founders of Google. I was lucky enough to work very closely with Larry Page for a number of years, running Google's corporate OKR process. And they knew how to really allow the company to be its best self, not putting in a lot of structure, putting a little bit of structure, but letting sort of the inmates run the asylum, so to speak. There were so many experiments and projects, and letting it really drive forward as a technology company. I don't think there was a brilliant vision that was like, in 20 years we'll be this, and here's our roadmap. But it was very much about taking advantage of a few things and doing a few things very well, which I think allowed Google to be a fantastic company. And that's been one of my takeaways in venture as well. When I joined Highland Capital in my late 20s, again, never thought I'd be a venture capitalist, kind of stumbled into the job. One of the things I saw time and time again was, so many smart entrepreneurs try to do like 10 things right. I always say do less, try to figure out the one thing or two things that really matter and focus on that. Because Google also made so many mistakes along the way, and that never really gets talked about in the books and business school case studies. They did a couple of things phenomenally well in terms of search and ads, and that really covered up a lot of mistakes. And that's what really mattered at the end of the day, was this phenomenal engine that they built and allowed them to experiment and build these other great companies and products over the coming years from when it was founded.
Mm, interesting. And I wanted to talk about Google search. What
Yeah,
has happened in the last 2 years is we've had platforms like Perplexity
oh, sure.
and ChatGPT, and
Yeah.
by default, search engine has now become Perplexity. But do you
Yeah.
think Google needs to be, should be wary about, these platforms? And do you think search engines, I mean, the search revenue is going to go away to these, platforms?
Yeah, it's a great question. And I'm a big fan of Arvind. I've spent some time with him. I use Perplexity regularly along with ChatGPT. I think they're really intriguing services. When I think about search, I think about it in a few ways. First and foremost, I think there's the search of like breaking it down in a few kind of segments. There's search of, what information do I want to find? Do I want to find a pizza restaurant in Palo Alto, right? I'm not going to use Perplexity for that query, right?
Yeah.
That's a different type of query. And I think the thing that often gets forgotten in search, it's not just about the experience on the consumer side, it's about the advertiser side, right? Google works because there's this synergy between the advertisers who want to be surfaced on Google, the publishers who want their content to be surfaced into Google, and then Google being sort of this overlay on top to help you retrieve information quickly and then drive content to the New York Times or restaurant reviews website, what have you. The thing that's interesting, I don't think that ChatGPT and Perplexity as built today are going to disrupt Google. There's a habit
Mhm.
that was been built for 20 years. I still use Google every day.
Yeah.
It's a habit that's been built. I've also used for Perplexity, but for a very different type of query. I think of them as sort of longer kind of queries I want to dwell on. It's for research projects, right? Help explain to me XYZ thing, give me a summary of XYZ thing. Those are queries which don't monetize in the same way as I want to order a pizza right now. Help me order it. I want to buy movie tickets right now. And so I don't think that a consumer subscription business is going to be the thing that really disrupts Google's business. There will be people that pay for these services, and that's great. But the world has gotten used to search for free. you know? And, the most expensive queries are these long tail queries, right? Like, explain to me this research paper, go find that. You can't really monetize it. It costs a lot to index and store that content, right? And serve it. Very different than something that's very quick and easy to monetize. So, I'm intrigued where Perplexity and others will go as they think about monetization, but I do think they need to think through how do they get to the advertising side. I don't think consumer subscriptions is going to be enough to create the next trillion-dollar company. You have to do more than that. But what I do like as a whole in this, I think we're in the early days of all these things, and I love that these companies, AI companies, are pushing Google to do more.
Yeah.
I do think that is fantastic. I think that's good for Google. I think it's good for us as consumers. I think in general, competition is great. And having those companies out there, and these are tiny companies relative to the scale of Google,
Sure.
the fact that they're pushing Google to try to do different things is awesome. So I'm very excited about that.
Mm. Interesting. And before the call, we talked about how the last 2 years have been difficult for early stage startups, and even for bigger companies as well. But what sort of challenges do you think startups are facing in today's market, and what should entrepreneurs and founders do to navigate those challenges?
Yeah. So I think it's important for founders to always be aware of the market conditions, the
Yeah.
macro that you're building in. And I think sometimes that gets lost because founders sometimes are like, well, I'm building a product that solves a problem, right? But that's oftentimes not enough. Like we were talking about earlier, Google was a great company because the web was exploding, and that had
Yeah.
nothing to do with Google. It was just this macro effect that was happening, right?
Sure.
And I think that's something that founders should really be aware of like what's the macro, what's happening, I often think that, Uber, which is a great company, I don't think Uber could have been built in today's environment. It costs so much money to build Uber, and it only really worked when it was at true global scale. But you have to really believe. And in a zero interest rate environment, that capital was available. In today's environment, I don't think that much capital would be available for a company that like Uber, as amazing as a company as Uber is. So I would say, number one, founders, be aware of what's happening in the macro, right? Even if you have a great idea, is it the right idea for this moment in time? Are
Mm.
people ready to fund it? Or is there a market tailwind that you're taking advantage of, et cetera? So that's critical. One thing I think that's important on the capital side right now for founders is that I do think that the seed ecosystem is fairly rich and ripe and thick, which is great. There's all different forms of pre-seed and seed funding, which I think is wonderful. It allows people to really kind of get going and experiment. There is a Series A crunch happening. So Nava Ventures, we focus exclusively on Series A. That is all we do. There is a Series A crunch happening, similar to, call it, I think maybe 14, 15 years ago. If you look at the ratio of seed to Series A companies, today, I want to say it's probably about 5 to 6 seed companies for every Series A, maybe even higher. So the bar is just higher in general, So I
Right.
think that's tough, especially when you have with the rich and thick ecosystem of seed funding. The expectations are higher, Just because you raised $2 or $3 million and got going, that's great. But now it's like, well, you raised $2 or $3 million, or maybe $5 million, or $8 million, and you're calling it a seed. What did you do with that money? Regardless of what you call it, what did you produce, right? And I think in this moment in time, founders that raised a lot of money and were celebrating that, 2 years ago, need to be really thoughtful about the story they're telling if they're going out to market now. How did they deploy that capital? What was the insight that they discovered? How do they think about going forward? Because I do think in this moment in time, a lot of venture capitalists, with the exception of sort of AI, and we can talk specifically about AI, are very fearful of capital intensive businesses. I think there's a class of companies, OpenAI is an example, that can raise huge gobs and gobs of money, because there is sort of a bigger vision of what it could be. But I think many companies aren't in that position, so they're going to be held accountable in a different way. So some of those things I think founders right now should be thinking about. And we're seeing that in the data too. The number of seed companies that are doing quote unquote seed extensions. They had built their company thinking capital will be much more available, and it's not. So they're kind of doing these bridge rounds to kind of get to the next phase of company. They're kind of scaling back a bigger vision to be like, what can I deliver in the next couple of years? Which I think are all healthy things. Generally speaking, I think constraints drive innovation more so than anything else. A free flow of capital does not equal innovation in my book.
Got it. Uh, and one of the VCs, Harry Sebing made an interesting point that uh, during in order for founders to raise Series A, the analogy has changed from being a Walt Disney to Jerry Maguire. So it's rather than telling a story, now you have to show them the money. So
Yeah.
is that the analogy which is happening for founders to raise Series A?
I mean, I think the founders have to be more precise in what they're doing.
Okay.
I think you don't always have to have revenue and show me the money, so to speak. I think there are many great companies that the Series A should not be focused on monetization. I think that can kind of take them in the wrong direction. I often tell my CEOs that all revenue is not equal, and sometimes revenue can be intoxicating. And it's the wrong thing for the business. Like if you're doing services revenue or you start chasing the wrong kind of customers which really aren't reflective of the kind of business you want to build. So you have to be thoughtful about that. I do think, though, that what's happening right now with a lot of companies is make a business case. Maybe before 10 years ago, it could have been like, well, I'm not sure how I'm going to build this, but I just want to get to scale. And if I get to scale, I know I'll figure it out, right? If I get enough eyeballs, I know I can monetize it, what have you. Today, I would say I don't think smart investors require you to have like monetization, but they will say, let's dream a little. What are the different ways you could monetize this business? What are the different ways you could charge for the service? Tell me a story there. I don't think you have to be doing it today, but you do have to have like some ideas about how you're going to do it.
Hmm. Got it. And especially, with VCs, they help you with capital. But how do you
Yeah.
approach, mentorship and supporting entrepreneurs in your own network and your portfolio companies?
Yeah, I think that's key because I think, frankly, capital is a commodity. Everybody's
Yeah.
money is green, so to speak, right? But it's really about like the person attached to that capital. And I've seen some investors actually be very destructive to companies, and I've seen some investors really help companies. But at the end of the day, it's the founder journey. I think unfortunately, a lot of investors take a lot of credit for helping companies, and really, it's the management teams in my book that build great companies. It ends and begins with them. Like on the margin, I think investors help, but our philosophy in Nava is that you know the best thing you can do for an entrepreneur is help them become their best self. And we do that. Our culture at Nava is really driven by three core pillars: kindness, truth, and hustle. Kindness is kind of a funny one. You don't often hear that in venture capital. It's critical. We think that in a culture of kindness, you can learn to take risk, become a manager of risk, learn to experiment. In a rigid culture, you're afraid to take risk. And that's really bad for an early stage entrepreneur. You want them taking risk. Obviously, you want to avoid the catastrophic fail case, but you want them to learn to manage risk effectively. And through that, they learn, they fall, they get up, they become better and better every day. And that's what I really hope for with my entrepreneurs. You can't, I don't think venture capitalists can change the direction and course of a company. But they can help founders become better and better in who they are, and those founders and management teams can then change the direction of the company.
Hmm. Got it. Interesting. Um, and how do you approach, market sizing, especially, when Uber had started, nobody thought it's about the market size, but over the time, it did grow. But how should a founder and how do you look at, market sizing?
Yeah, I'm glad you brought this up. And I think Uber is a great example. Market size is such a critical thing that most venture capitalists talk about. I
Yeah.
think some do it well. I think others, I would say, take too much of I'm a second year banking analyst approach, right?
Yeah.
And it's not all in the numbers. If it was always all in the numbers, anybody could do the job, right? I think there's an
Yeah.
element to pattern matching and intuition that's really important. And if we go back to this canonical example of Uber, if you looked at the taxi cab market, you'd been like, this is not that interesting of a business. But if you thought about it from the perspective, oh, there's behavior change. If there's a way for me to change my mobility, would that allow me to spend more money on a service like this? Would it change how things move in a particular ecosystem and economy? And that's the really interesting part. So when we look at a company, we like to do it from two lenses. We look at it from the quantitative perspective of what could happen. Then we look at it from the qualitative perspective. Tell the story. What's the narrative here that could be? And if both of those lenses seem interesting, then I think you have an interesting market size story. And for us, when we invest, we try to invest in companies that can be at least $10 billion in scale and size. It's not so much as a hard number of 10 billion, but it's shorthand for, is the market big enough? Because I think the best companies not just go from market taking companies, but reshape the entire market. In that Uber example, Uber truly reshaped what it meant to do ride sharing and get into a taxi, so to speak. And it's pretty incredible. And I think that's what the really best companies will do.
Mm. Got it. Um, and what are your thoughts on the idea that the best companies will always expand their markets? I'm quite intrigued about Waymo, and looks like that's a new market. But what are your thoughts about expanding the market?
100%. The best companies do that. They change the shape of what the market is and
Mm.
reconfigure it. I think they start maybe from taking market share, because
Yeah.
people are used to kind of lookalike solutions, etc. But they really change and redefine what the market means. And I think it's hard to predict always what that is. So what I look for is like, hey, is there a realm of possibilities where this can happen with like Waymo, right? Right? If you have truly robo taxis and automation, what does that really mean? Do costs really start to go to zero in terms of movement? And how does that affect what types of things I would be doing and where I would go? One of the things that often I think people focus on in tech is speed, speed, speed. If it gets done faster, is it better? And I think that's unfortunate. Faster is not always better. And what I'm excited about is a new class of companies where, let's take Waymo as an example. Maybe I get the car faster, there's higher utilization, all that good stuff that people talk about a lot. But maybe also if I have a robo taxi, there's more space in the car. The journey from point A to point B is more enjoyable. It's more luxurious. It's a different kind of feel. It's not that I'm sitting in the cramped back seat of a car. It's actually I can stretch my legs out. Maybe I can watch a movie. Maybe I can make a phone call that's like much more high fidelity. Maybe I'll get on a Zoom. It's using my time in general better. And I think as those are things that are kind of hard to predict because they're a little bit sci-fi, but that's when the markets really start to reshape and change.
Got it. And what are your thoughts on market timing risk, and any lessons on timing?
I would say as a founder and as an investor, you're always taking market risk, market timing risk,
Yeah.
because if you could predict exactly when a market was happening, you would be, a genius. Even the best investors in the world can't do that, right? It's so difficult. So I think you always have to be willing to take market timing risk, but you have to be then risk adjusted. Are those entrepreneurs, are those founders able to kind of use this analogy of surfing the wave, right? Seeing that there is a growing market, can they navigate that market? Can they start to adapt the company to the specific needs of that market and grow very quickly? But market risk is always there. And I actually think startups don't die because of bad ideas. Well, sometimes they do because of bad ideas, but oftentimes they die because of market timing. They're just too early or too late in the market. And the founding team and management team has not been able to adapt the company to that. I think you're seeing that now. And we're living in this moment where there are a lot of companies that were enterprise SaaS tools that Gen AI came along, and some of those companies are going to die because they just couldn't adapt fast enough and can't embrace new technology. And the ones that can will have an amazing leg up because they'll have already built out an insight on around the customer in terms of the sales team, in terms of all the distribution mechanisms. But now they have a better technology. And so the best companies will then accelerate and even go faster. The ones that struggle to really understand, oh, wait, the market is shifting. What do I do with it? Those are the ones that are going to waste time and lose the edge.
Got it. And I just realized I work with founders who've been who like the first time founders, um and I was fortunate enough to work with Ritesh, who was a Thiel fellow, and Hannah, who was a Forbes 30 under 30 founder. Both led marketplaces. But do you prefer founders who are new to the market and have that optimistic naivety, or do you like working with founders who are expert in the market knowledge, and they just want to double down on what they learned?
The way I think about founders is tell me a secret. Tell me the unknown unknown about what you're doing. I often tell founders if I know more about a market than you, I'm not investing. You
Yeah.
spend thousands of hours thinking about this. I spend some time thinking about it, but you are supposed to be one of the experts in the world, right? Tell me that secret. If you can't do that, then that's a problem, right? If the investor knows more about the market, there may be pattern recognition in general that's useful. I think that's valuable, right? But to that deep, deep market insight, I think that's really critical when you're working with founders. And so when it comes to kind of first-time founders or folks that are brilliant young people or people that are sort of experienced serial entrepreneurs, I like both. I think both have their place. Sometimes you want the hubris that says the unknown, I don't care how the world is, I'm building this company this way. Sometimes you want people to have deep industry insight and expertise. I think you have to really think about, well, what is the industry that they're going after, right? For example, I probably wouldn't want a founder that is building a surgical device that's never been in a surgery operating theater.
Yeah.
It's like that whole idea of like, well, run fast, break things, fail quickly. Not when someone's life's on the line. That's a you want there's that's a different kind of founder. But if you're a founder building a messaging service or a social network where if it breaks, it's not sort of catastrophic, that's great. You want somebody that's really experimenting, iterating, willing to move quickly in a different type of way. So I think it's really about the type of company you're going to build and finding that founder market fit. And always though, always going back to this idea of can that founder tell you a secret? Do they see the world a little differently? And is it interesting? Do I agree with that perspective on the world?
Interesting. And um, you know, it may not be relevant now, but a couple of years back, like Tiger Global was investing into founders,
Mm.
and they were not even. I'm not even sure if they were coming on the cap table. They just give money, and that's about it. But do you think the best founders really need help from VCs?
Um, I think the best founders figure it out themselves, so to speak. I
Mhm.
think every founder needs help though, right? They need
Okay.
help. No, nobody's a team of one.
Yeah.
Even some of the legendary people that created value, like Steve Jobs. Steve Jobs was amazing because of the incredible people at Apple that he hired and built the company with, right? So you're only as good as your team. And I think a VC is a component of your team. And I think what founders really need to make sure is that this goes back to it's not about the capital, it's about the person. Is that person just like you would just because somebody, for example, is a brilliant engineer, they may not be culture fit for your company.
Yeah.
So you wouldn't just hire somebody because they're brilliant PhD. It's like, well, does this person really help my company and fit into our culture? The same thing for venture capital. I think that it's really important for founders to spend time with venture capitalists and say, does this person fit with who I am? Do they resonate with me? Are they going to help me be better? Where are they short? Because no VC can do it all. Where are their shortcomings? And have those conversations. I think it's dangerous when founders don't have those conversations and really are just picking off, oh, a fancy brand or just solely on valuation. Because the thing that you can't do with an investor that you can do with an employee is you can't really fire an investor. It's very hard, right? And I think it's unfortunate when founders go through these very quick processes of, hey, I'm meeting you on Monday and I'm closing on Friday. Let's quickly get to know you because then you're stuck with this person maybe for 10 years on your board, or
Yeah.
on your cap table. And so that's a pretty big decision to make in a pretty short period of time.
Hmm. Interesting. And I want to talk about board management. Who's the best board member that you work with, and why were they so good?
Yeah. I've been fortunate to see so many amazing people on boards over the course of my career, from the early Google boards, being able to get a glimpse into folks like Mike Moritz and John Doerr, who are legendary, being then in my career, actually co-investing with some great investors like Scott Sandell, who runs NEA, now is the exec chair, Emily Melton, who's the founder of Threshold Ventures, Greg Papadopoulos, who's also at NEA, who's like one of the most brilliant. He's actually an MIT professor and then became a venture capitalist. There's so many different folks that I think are just brilliant in different ways. So I've been able to learn a lot from them and see how they operate from a day-to-day perspective.
Interesting. And where do you see that, VCs and founders are not aligned? Are there any core areas where you find that they're not aligned properly?
Yeah, I think one of the phenomena that's happened in the last few years in my career in venture, and I've been in venture since 2010, so about 14 years, is the ecosystem's changed a lot. There's a lot of capital in the market. I think that the misalignment often happens where I think founders have great ideas, and oftentimes founders are solving good problems. The misalignment happens with, are they venture scale problems? And I think sometimes founders don't spend enough time thinking about, do I really want to build a public company? Is the product I'm doing really something that scales? Do I want to go on that journey? And I think there are many great businesses that I come across that would say, hey, this is a business that, will be a 20 million, 50 million, maybe even $80 million a year business. Just great. But is it really going to grow to public scale? And by the way, the bar and threshold for public scale IPO businesses is getting higher and higher.
Yeah.
It's not just 100 million, it's like hundreds of millions. Even some would argue 500 to $1 billion in revenue before you can go
True.
public these days, right? And so I think the unfortunate thing that's happening right now where there's misalignment is, are founders really thinking about, what does it mean to take on venture capital? And am I growing a business that truly will be a public scale business? Because venture capital, in my book, it's like if you're building an engine, there's fuel that fuels the engine, like cash. Some companies are generating their own cash and profitable, right? Like the dry cleaner down the street from me, that fella generates his own fuel. There's some companies that just get gasoline from other places, bank loans, etc. Venture capital is like nitrous oxide. You put it in the engine. Some engines can handle it and they just go faster. Some engines just blow up. But at the end of the day, most venture capital is all about binary outcomes. Are you a big enough company that kind of can handle this kind of particular fuel, which will make you go faster, which will make you go a little crazy at times, which will make you go a little bit uncontrollably. But the companies that absorb it ends up becoming huge and changing the world.
Got it. Interesting. And I'm not been involved with venture capital, but I've been involved with crowdfunding and angel
Mm.
syndicates, and few of the ways in which I've been able to support founders in a very small way. But um, is there something you would want to change between the relationship that the founders and VCs have, and you see that change in VC world going forward?
Yeah, I mean, I love that there are many different mechanisms for folks to fund companies these days, like
Hmm.
from crowdfunding to Kickstarter to all these different types of things. I think it's great.
Yeah.
I think having access to capital of all different shapes and forms is only good for entrepreneurship. I think it lets people take risks in ways they wouldn't otherwise. So I love that. I think with venture capital, I think it goes back to this idea of really understanding expectations and having clear expectations alignment, right? So an angel, for example, may have a very different perspective on what a win looks like than a seed fund, than a Series
Yeah.
A fund, et cetera, et cetera. And just being clear about what that means and having really the discussion, because I think oftentimes people will do the shorthand of like, yeah, of course I want to build a public company. Yeah, but do you want to build a public company? Is that really something you want? It's interesting that a number of companies now that are phenomenal companies, like Stripe and others that are really at scale, global scale, are still not public. And that's the founder's choice, and that's fantastic. It's a they have the freedom to do what they want, but it's something to think about. It's like, wow, even at that scale, these companies are choosing not to go public yet. Like, what does that mean? Especially, I would be thinking a lot about that question if I was a founder today, because you can create an amazing business, but do you really have to create an amazing business that scales to billions of people? There's so many phenomenal businesses in the world that touch the lives of people that are really important, that maybe only have, 50 employees, but are doing some phenomenal things.
Yeah, yeah, interesting. And Nava Ventures, focus on Series A startups. But what do you prioritize between founder and market? What's more important for you?
Yeah. So I think every VC kind of looks at deals from like the founder, market, product kind of financing perspective, that kind of raw kind of formula. For us, we always look for what we call founder market fit. And we care a lot about who the founding team is. We really, really want to know like who these people were from, not just from founding the company, but 0 to 18. What's their life story? What about them? What have they gone through? Or do they have something not just about the industry, but about who they are? Can they recruit a team? All that. So we care a lot about that. But we also care about the market. We care about, is there tailwinds in the market? So to answer your question, do you care only about founders or only about market? I care about both. I think you have to look at both.
Got it. And do you have like a anti-VC portfolio? Any big misses that you've missed out? And does it
Oof.
change your approach? And how do you look at it,
Yeah, so many misses. I think if you're in Silicon Valley long enough, you'll have a pretty long anti portfolio. A couple come to mind. Snapchat, I think, is one. So I met that quite early on in my career in venture. With Snap, I missed it because I didn't, I had the wrong lessons learned. Like Snapchat initially was not just, it was a type of communication around these disappearing images when it first started, right? And some of those images were about privacy or about something a little bit more risque, right? And for me, I was like, oh, that's I don't want to touch that, right? I was too narrow-minded. I didn't really understand, oh, this is a form of entertainment, right? This is how younger people are connecting, right? And if I just looked at the numbers and usage and really stepped back from sort of some of the types of content, I would have been like, oh, this is an amazing business that's very sticky, that really speaks to a whole new generation of people. Another miss for me was Canva. I think a lot of people missed that. I had the Melanie just built such an amazing company. Some of my friends have been investors in that company, like Wesley Chan and Cable Desai, who are now really fantastic investors in Silicon Valley and former Googlers. But that company, the wrong lesson for me there was, from venture, talking to other people in venture, I was always told, don't invest in tools businesses. Tools businesses are bad businesses, right? And, not really being self-critical enough or think following your intuition, right? You're like, okay, well, I guess that's what is a bad business. So let me just, it doesn't check the boxes. And actually, now what I try to do to avoid all this stuff is really have a diverse set of lenses on an opportunity, because that's where the real alpha is going to be. At Nava, we've built a pretty diverse team. A big chunk of our investment team is not from traditional venture capital backgrounds; they're from operating backgrounds. And I think that really adds to the mix. You can train somebody in the art of Series A. I don't think you can give somebody life experience or a network. That takes years and years to build up. And that's where I hope we don't miss these next opportunities. I think a lot of times firms look for learnings from past deals and are just looking for that same deal. There's a lot of baggage with every deal. And so for
Yeah.
us, we try not to do that.
Hmm. Interesting. Manish, I quickly want to do the top three. What's your favorite
Yeah.
business book?
Oh, say it one more time. Right, sorry.
Yeah, sorry. Oh, what's your favorite business book?
Oh, my favorite business book is Creative Confidence by David Kelly, who's a professor at Stanford, and I'm lucky enough to teach with him. I love that book because it's very much about how to creativity is a muscle. It's not a
Yeah,
gift. You train it, you learn it. And it's also about becoming your best self, which is something I really believe the best founders are.
got it. Interesting. And if you could go back in time when you started at Nava Ventures.
Oh, can you say it one more time, Rohit? That got cut.
Yeah, sorry. If you could go back in time when you started with Nava Ventures, what is the one thing you would have focused on or done anything differently?
Yeah, the one thing I would have done differently, and this is probably a bit cheeky, was that we had the opportunity to probably raise a bigger fund. Our first fund,
Mhm.
175 million, which has been great. But I think that we probably could have gone a little bigger to get a little bit more diversity in portfolio and take advantage of what happened in the market. We raised our fund and then the entire market turned, which was a great opportunity for Series A firms because valuations were lower and have been lower than ever.
Got it. And do you have any favorite online tools, for example, Gmail, Slack, Zoom?
Yeah. Again, I'm very biased here, so this is a boring answer, but Google is my favorite online tool. I love it. Search is still incredible. I think it's unbelievable that I'm still blown away by like I can sit at my computer and the entire world's information is at your fingertips. This probably
True.
dates me a little bit, but it's pretty special. And then my second favorite online tool is, and again, I'm biased because I got a chance to be part of building this tool, was Google Maps. It's
Yeah.
phenomenal just to be able to look at things in the world and connect to things in a very different way than I think people could ever have.
Got it. Absolutely. We'll put that in the show notes. And Manish, what's the best way people can reach out to you and know more about Nava Ventures?
Yeah, absolutely. So please go to our website, which is www.nava.vc. And then my email is Manish, Manish, at nava.vc.
Yeah, no, absolutely. We'll put that in the show notes. Manish, thank you so much for taking our time and speaking to us. I really enjoyed my conversation with you.
This has been great, Rohit. Have a great rest of the day.